So is it time to shake the trees? Tree shakes occur when too many weak hands join a bull market. Excess success has its downfall. We can see here uranium gathering more and more attention. Just look at the volume spikes on the daily, on the weekly, even here on the monthly. These are our best technical measures because the futures market is pretty opaque. So what do we see? Got a nasty reversal here on Friday, escalating volume. That caused this weekly reversal that you see. On the long term though, this still looks great. You can tell how strong a market is when you can't even print a swing point high. Last one printed way back in early August. But as we move towards the end of September here, the key bar now where demand is going to be felt is on the September 14th bar, where top and bottom 2130, 2245. I think that's the key area. If we get in below that, they're going to shake the trees. As long as we stay above that, things are going to be great. That's the physical market. Switching here to the stocks, using the ETF URA, which is the most popular one, look on the monthly, spiked up into all that resistance that you see there at the red, right? That's the supply line, and it was most heavy in March and April of 2022. That's where we ran into problems. You can see we got volumes pick up, but less volume than that area. That pushed stock prices back down, and it's going to take more work to get up and over that. Looking here at the weekly, actually it looks pretty good. Big volume spikes last 3 weeks, pushing new highs, getting some long tails on the top side last week. A doji, yeah, we can get some backfill. That probably would be normal here. And here on the daily, that 26 area looks to be the key area, right? That's where the demand line is. As long as that holds, these weaker hands are going to hold on. It's just that if that fails, the trees are going to shake. And moving to the Uranium, which is my preferred vehicle, this ETF had a nice spike up into that 47.43, but it got over it, under it, less volume, right? That says that, hey, this thing can come back some. And the daily here has basically the same setup as you see over on the URA. Got over, back under. That 43.22 area looks to be the lower demand line area. So I would be focused on those two spots. In general, we're seeing huge volume spikes across all these uranium trading vehicles. And it says that the markets are taking on a more speculative tenor. That will eventually lead to some shaking of the trees, but it just doesn't look like it's going to happen right now. It's just something to keep in mind for when it does happen. It's going to be a great place to pick up some more inventory on the cheap.